Hello everyone and welcome to TTT Markets. I am Fotis I'm a professional portfolio manager, and in this video I wish to discuss with you the evolving economic challenges facing the UK. We are going to discuss what is happening right now and how this could affect the pound sterling. Now, the UK economy is showing worrying signs of weakness despite a strong start to 2025. GDP growth forecasts have been lowered, they have been downgraded repeatedly from 1.6% to about 1.1% this year, and we are expecting, again, slowing growth in 2026 as well. Recent data indicate months of contraction in output. Inflation, high. Inflation remains elevated around 3.6%. In reality, it could be even higher, which is well above the Bank of England's 2% target. This is not simply economics. This is squeezing household budgets, and it is affecting in a negative way consumer spending. One of the big storylines, of course, is the risk of stagflation. You might say, what is stagflation? And you can see it right here in the news. Stagflation is a period of very slow or no growth combined with rising prices, high inflation. This is one of the worst scenarios that an economy can face. Slow or very low or non-existent growth and very high inflation. Practically, this is complicating the Bank of England's task. The central bank, so far, has kept interest rates at 4% after a long period of increases, aiming to lower inflation. This is what they use to fight inflation, increase interest rates. Its latest decision was to hold rates steady, but reduce the pace of asset sales, specifically government bonds, which they accumulated during the quantitative easing programs after the financial crisis and pandemic. Do you understand what is quantitative easing? Quantitative easing involves the bank creating money electronically to buy government bonds and push down interest rates. So the central bank, they are creating money electronically, they print money, and they are buying assets. It could be equities, but most of the times it is bonds. So they buy bonds. The bonds have an inverse relationship with interest rates. So if they buy bonds, then the interest rates, the yields are moving lower. And this is why they do it. And this is a way to fight inflation. But it comes with a catch. Bond prices after the pandemic have been falling sharply, contributing to higher borrowing costs in the UK against other economies. This is putting extra pressure on the government's finances and Chancellor Rachel Reeves' budget plans. But let me show you. So let's go right here, and you can see 30-year bond prices. What do you notice? What happened since the pandemic, since the first half of 2020? What has happened to bond prices? You can see that bond prices have dropped. At some point, they were down close to 70%, down 67%. Right now, they are facing losses. It is about 47%. These losses are enormous for the Bank of England. These are bonds they bought during the pandemic. Remember the QE. They printed money to buy bonds and lower yields. But bond prices since then, because of high inflation, have dropped. And the Bank of England is incurring extremely big losses. You might say now, okay, what has this got to do with me? How is this affecting the UK consumer? How is this affecting the UK's public finances? Here is the catch that I talked earlier. The Bank of England bought government bonds at low interest rates, and it is now selling at a huge loss. They bought here, and they are terminating the program down here. They are facing very big losses. In numbers, these losses, they are around 115 to 130 billion. These are the losses that the Bank of England is facing. Now I have I was going to say good news, but it is not good news, and I'm not even going to joke about this. Who is going to pay for this loss? I'm going to leave you 3 seconds. You don't need more to think about it. The Bank of England is facing hundreds of billions of pounds in losses. Who is going to pay for this? Who is legally responsible for this? You probably have guessed correctly. It is the Treasury, and by Treasury means the UK taxpayer. So over time, the UK taxpayer will have to pay for the losses by the Bank of England. And we are not talking about small losses, between 115 to 130 billion. So these losses, they increase pressure on public finances. They are making government borrowing even more expensive. They complicate budget plans for the Chancellor. This is going to constrain fiscal policy flexibility, and it is going to add to the UK's fiscal black hole. What does this mean? The UK has the public finances. They need to pay for trains, hospital, the army, the police officers, the teachers, the pensions, roads, you name it, public utilities. They need the budget for the government to operate. They have a hole. I don't remember right now exactly how big is this hole. It could be 50, 60 billion. So this is a challenge, and you can imagine what is going on with the Bank of England and the huge losses. It is not helping, because what are the solutions to the Treasury? What can the Treasury do? They are going to start cutting programs, cut pensions, cut various help to the public, cut programs, and so on. You get the idea. And still, they cannot fill this fiscal black hole. Still, they must they must find even more money. What are they going to do? Well, they say, here is the solution for every government. Let's raise taxes. But if they raise taxes, we are not promoting growth. And you have probably witnessed this in the UK. How many millionaires are leaving the country because of very high taxation? I was reading a statistic that every 45 minutes, one big millionaire is leaving the UK for Dubai, Abu Dhabi, or rest of the world. So raising taxes is not an investor-friendly policy. It is not going to promote growth. This is why we said we have stagflation. Here are the losses, huge losses. The UK government has a fiscal black hole anyway, and now the Bank of England's decisions, they are adding to the problem. Where are they going to find the money? They say raise taxes. Okay, but if they raise taxes, this is affecting negatively the public, because they can't stand it anymore. They have so many taxes they have to pay. This is not promoting growth. What they needed to do was to lower interest rates. You might say, well, why don't they lower interest rates so they can stimulate again the economy as they did before and stimulate growth and push forward? They can't do this anymore. They cannot go ahead and cut rates. That would have been nice. If they would cut rates, it means bond prices would go up, yields would be down, and the public, they could borrow money with lower costs. It would be extremely helpful for everyone. Here is the problem. Remember what we said earlier? Stagflation, low growth, high inflation. With high inflation, how are you going to cut rates? So as soon as the market, all the market participants, if this is becoming a very serious problem, it is not yet, but it could become, they realize that they cannot cut rates, they have a growth situation, a low or non-existent or even negative growth situation, high inflation, huge problems with the black hole in public finances. What do you think is going to happen? So this is our macro idea. I'm saying pay attention to this, and I will go to GBP, JPY. This is something that we discussed early September. What is the strategy here? This is weekly. Let me switch to daily, please. I said every time it's moving to highs, just sell. I'm preferring the yen against the USD, for example. Another one is also Euro GBP. I would avoid GBP USD because USD is having its own problems. So I said every time we reach the resistance or important highs that I have highlighted, sell. Let me delete this trend line, it's not needed anymore. So this is the pound yen. You can see what it is doing here. We have a consolidation, a triangle. Every time it's reaching highs that I have highlighted, I'm selling. If you are a little bit more conservative, if you are a technical trader, you can wait for a breakout, which could happen any minute. It could happen the next month, after 2 months. But my outlook is that this is going to come crashing down. This is why I'm saying every time it is reaching resistance to the upside, I am looking to sell the pound yen. If it breaks this trend line, the party begins. So I'm just going to zoom out a little bit so you can see this. So practically, everything that we discussed about global macro and about the issues with the Bank of England and the UK's public finances, this is now the trading idea. Pound yen, we are looking at specific levels. Don't bet the farm. Do not bet big. Do not bet money you cannot afford to lose. And choose very carefully. So I'm looking every time if we have a move up, very close to resistance, I'm selling, or you can wait for a clean breakout to the downside. This is what we wanted to discuss with you about the UK's economy being on edge and how to trade GBP. Thank you for watching, and don't forget to subscribe so you will be notified for new videos we are going to release. Thank you.